So today, January 23rd, 2026, seems to have been a ugly day across the board for majority of day traders, including myself. Well, not necessarily ugly for myself, but definitely unsatisfactory. And during my trade recap, where I was essentially journaling my trade via a YouTube video, I actually found the reason why today didn't play out the way it did in regards, in particular, with my trading style. And I figured it'd be important or it'd be nice for me to share it. Because I think anybody can use this to their advantage, whether you trade SMC, whether you trade order flow, momentum, whatever it may be. This is actually something important that you can keep in mind. All right. So, starting off on the bias for the day, before market even opened, what was I thinking? I covered this in my trade recap, but I don't mind doing it again. Looking at the hourly time frame, we have some Asia highs, some previous session highs, and we have some what seems to be like Asia open lows that ended up getting taken out before market even opened during actually London session, but we also had previous session lows and some more previous session lows. Okay. On top of that, we had a bullish hourly unfilled gap, a real big one over here on both NQ and ES, which actually fell in equilibrium of the 4-hour move. So this is what I mean. If we look at it on the 4-hour time frame, and we use our Fibonacci tool, we start from here, we go up to the highest point that price has climbed up to. We see that 50%, meaning equilibrium, of this move falls into this hourly unfilled, as well as 0.618. Same applies for ES. And I actually mapped out these levels because I was looking to originally take profits on them. I was very bearish on the day, and that is purely because of market structure. We were pretty far away from this gap. I mean, not too far, but I wasn't really interested in this gap as much as I am usually in unfilled high time frame gaps. And mainly because I was more interested in this hourly bearish unfilled gap that we had both on NQ and ES. So the bias for today originally was split until I started looking at structure, market structure on both indexes. Let's do this, makes things a little nicer, a little prettier. There you go. On the 4-hour time frame on NQ, we actually break structure to the downside right down here. Okay, so this bearish 4-hour candle ends up closing below this wick, so that signifies a break of structure. Same thing on ES right over here. Going down to the hourly time frames, NQ is a little more confusing because we were originally bearish, then we switched to bullish after inversing this gap right here, hourly gap, And then once again, we switch to bearish after inversing another hourly gap. Okay. So at the end of the day, NQ on the hourly time frame was bearish. That's not true with ES though, because ES didn't have a uh, inverse of any bullish fair value gaps on the hourly time frame. So because we inversed this bearish gap on ES, this put us in bullish structure, and we maintained that bullish structure all the way up until market open. Now at this point, with what we have, my bias was actually extremely mixed. It was very weak because we could have very well came down to retrace a little bit more before we made a move up. But we also could have very well just taken out these lows and then came all the way up to fill this hourly unfilled bearish gap on both S&P and NASDAQ. Until I saw this, right? Right over here, we actually have what seems to be a hourly SMT divergence happening on these lows right here. So as the ES came down, actually took out these lows, barely, but you can see it wicked past them, whereas NQ did not. And then the following candle after it was a bullishly closed hourly candle, which signifies that it is officially an SMT. Cool. Wouldn't you say that that is a bullish confluence? Yes, but here's what happened, right? From there, we ended up coming all the way up into this hourly unfilled gap right over here. And we actually rejected off of it in the form of not only a big wick, but also a bearish close on an hourly candle on both NQ and ES. So this means that the SMT was complete, meaning we formed the SMT, we made the move we were going to make, we reacted off of a key level, and now we're coming back down. And so I was like, okay, cool. Well, we already filled this hourly gap. We're rejecting off of this hourly gap. We made an SMT. So then the next best logical area for price to go is to come all the way down to either take out these lows, fill in this gap, take out equilibrium, whatever it may be, on both indexes. Because we already made a retrace to the upside over here, and we actually rejected off of that retrace. And here's where I was wrong, and here's where the lesson comes in, and I think it's very important. Just because a high on a lower time frame, let's actually move away from this, and let's show you something over here, right? Let's mark this out just so that we remember where this area is. Just because this is a 5-minute high, or sorry, a 5-minute low, that doesn't mean it's specifically a 5-minute low. Because if we go on to the 15-minute time frame, what do we see? This is also a low on the 15-minute time frame. Okay. We go up on the 30-minute time frame. This is also a low on the 30-minute time frame. On the hourly time frame, guess what? Also a low, 4 hour, also a low. Daily, actually, we're gonna have to remove this gap because it's getting a little bit in the way. Daily, I hope I remember this. On the daily, it officially is not a low, okay? Because this is officially the low on the daily, right? So this is a 4-hour low. Cool. Essentially, you want to go up in time frame when we are looking at market structure as high as possible until that low is present, okay? And that's what messed us up here, okay? Because sure, yeah, on the hourly time frame, did we make an SMT? Yeah. Does it look good? Yeah. But the problem is this isn't an hourly low. This is a 4-hour low, right? So if we're looking at this on the 4-hour, again, when we're looking at time frames, we want to have the time frames match, at least when it comes to certain things, especially when we're looking at SMTs in regards to highs and lows, right? Just because we had, just because this is technically also a 5-minute low right here, right? This is a 5-minute low. That doesn't mean that we made an SMT over here because hold on. That doesn't mean we made a 5-minute SMT over here just because ES took out, what the hell did I do? Okay, just because ES took out this low and there was a 5-minute bearish candle and Q didn't end up taking out this low and then there is a 5-minute bearish candle, bullish candle right after. No, that's not how SMTs work. SMTs have to, for an SMT to be valid, it has to match the time frame of the high or low that it's making off of it. So since this isn't a hourly low, since this is a 4-hour low, we're looking at the 4-hour chart now. And the SMT technically doesn't become valid all the way up until this candle, this 4-hour candle closes. And this 4-hour candle closes at 10 a.m. So this may seem like an SMT divergence a lot, but it's not because the true SMT divergence happened right over here. I think, hold on, I might be wrong. Yeah, okay, yeah. The true SMT divergence happened at the close of this 9 a.m. hourly candle. This is when the SMT became valid, okay? Because the 4-hour time frame candle closed. So how would have that changed the trajectory of the trading day? Well, that's hard to say. And we can look at it in a few different ways here. And the first way is that the bias would have not been strongly bearish. It would have went from strongly bearish, right, because of the completed SMT, to extremely neutral in this case. Very weak, no bias at all, essentially. I would have not had a bias if it wasn't for this specific thing. Or, like I said, it would have been a very weak bias. And again, today was just one of those very confusing days because we did make a hourly retrace, right, to the upside. But the fact that we still hadn't taken out these lows on NQ, if I was to notice that it was a 4-hour SMT today, and if I knew that the SMT wasn't complete, I will be honest, that would not have changed my trade, or would have had a very low impact on how my trade would have went. Simply because, I would have still thought, okay, that doesn't change the fact that we came up into this hourly gap and we retraced off of it and we actually rejected off of it with a confirmation. And especially on NQ, a confirmation of a hourly break of structure to the downside, right? I still would have had a bearish bias, in all honesty. But going forward, if I notice that SMT hasn't necessarily formed, but we're still not kind of, let's say, really looking like we're not going to take out these lows, right? Because it's not only once that these lows ended up getting hit on ES and missed on NQ, right? It was once, twice, 3 times in the whole session, right? 3 different times. Now, could you also say that I missed another SMT? I actually did, as a matter of fact, miss another SMT. And it was, funny enough, I'm just now seeing it. That is hilarious. That is actually hilarious. Oh, this was a double SMT. No, I did not miss anything. Yeah. No, actually, I did not miss anything. Because for this SMT to have been valid, this was a 1 hour low, hourly low, where on ES we took it out, on NQ we did not, right? But for it to have been a completed or a validated SMT, we still would have had to wait for a hourly close. Was this actually SMT? Okay. Kind of. Yeah, no, this was an hourly SMT. Yeah. Interesting. I didn't even just realize that. Well, there you go. That's another reason why I should have been a lot more cautious coming into today's trading day. But this is all I saw, right? Retracement into a bearish hourly gap. We reacted with a strong rejection. From there, what do we also do? On the 15-minute time frame, we inversed a 15-minute gap on NQ and as well as on ES, right? Boom. Not only did we inverse a gap, but we also made a new bearish this time 15-minute gap. Boom. On both, right? Boom. We're going to actually take this out. So we're trading in 15-minute bearish structure on both indexes. As market comes to open, right? As market opens on ES, we end up breaking 5-minute order flow and turning it into bearish 5-minute order flow. NQ still stays bullish order flow, but we have a 15-minute unfilled gap that we go in to fill, and we are in 15-minute bearish order flow. Okay. So naturally, what do? Well, what did I do? My trading style, this is what it is. When I have a strong bias, and my bias was extremely strong in terms of, meaning it was bullish, bearish, down. Today, what do? After a manipulation, the manipulation was these 30-minute highs that we had over here. The manipulation could have also been this London manipulation, I guess. So maybe looking more for like a continuation for the day. But we manipulated these 30-minute highs on both, not on both ES and NASDAQ, but on NASDAQ for sure. And that actually led me to believe that we may form a bearish SMT, funny enough. Manipulated those highs, saw rejection, saw 1-minute inversion, saw a 1-minute regular fair value gap form right over here. Boom, boom. Came into this 1-minute gap, actually ended up rejecting off it. Now, did I enter here? No. I entered much earlier than that. I entered right here on NQ. Right? It was a very, very early entry. And that's, again, that's just because my bias was so damn strong. And I wanted to see equilibrium of this gap get filled for 228 points. And it did not happen. So, moral of the story, make sure all your confluences are in line before deciding if you actually have a strong bias, right? Because if now going forward, if something like this was to happen, my bias would just be neutral for the day. That's it. And what would that mean? No early entry for me to miss out on profits because I don't know where price is going to go. Okay. So that what I did this morning would not have happened. This is nowhere near enough confirmation for me to enter a full-sized or a proper trade. This is just enough confirmation for me to enter a trade where I'm very low leveraged, and the reason why I would enter that trade is so that I can extend or take profits on the day if the market actually it doesn't end up giving me a quality full setup, or maximize profits if later on it does, but it does give me that setup much lower in price with a much worse entry, right? But if my bias was extremely mixed and uncertain, I would have sticked with my rules. Wait until 950 until putting any trades in. From there, look for no, I still would have taken this trade. What am I talking about? Because this is what we did. Let's see. I swear to God, this is gonna be so stupid. Let's just take this out for now. Maybe. What I'm thinking here is a since we pushed up into this 5-minute gap right here, the highest 5-minute gap, and we actually ended up not inversing it, we ended up closing below it, we just wicked it. And on top of that, we broke structure on the 1-minute time frame to the downside. So that would indicate a proper rejection of that gap. But then again, we were in bullish order flow without anything to signify a change in order flow. So maybe not. No, I would have not actually have taken this trade. I lied. So what would have I done? Cool. Actually, I'll show you what I did do. Because I did end up taking 2 trades. One that I lost, and then the second one I actually won. But boom, 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 whatever. Waited till 950. From here, obviously we see we're respecting this 1-minute gap. Okay, we get a rejection off of this minute gap. We break structure to the upside on the 1-minute time frame. We're still in bullish structure on the 5-minute. Okay. So I could have potentially entered there, but honestly, not without a retrace or something to suggest that price is supporting a level. Actually, maybe, yeah, I could have entered here. This would not have been a bad entry. Honestly, thinking about it, right? A rejection off of this 1-minute, right? We officially reject off of it by closing above it. And on this candle, on the same candle, we actually break structure to the upside. So I could have, obviously, this is a little iffy, but I definitely would have entered in with some potentially longs right over here. Stops right over here. Take profits. On NASDAQ in particular would have been at these equal highs. Okay. Quite honestly, or at least one of them would have been. I know I for sure would have had, well, no, because I wouldn't have had a second contract. And we didn't really have another opportunity to enter in with more positions on NASDAQ. So full take profit would have probably been either at this hourly unfilled or these relatively equal highs. But what actually I ended up actually doing was I took a trade on ES. And this is what we actually took it off of. Let's get rid of this. Okay, cool. On the 1 minute time frame, we end up, no, it was not on the 1 minute time frame. This was on the 15-minute time frame, right? Wow, I feel slow for whatever reason. This isn't fun. Okay. No, yeah. Yeah. I wonder if that was actually my entry. I have to double check. But what I ended up taking a trade off of is somewhere over here when we actually came into this filled gap, to this hourly gap. Oh, yeah. It was something like this. Long position, I think off of the rejection of this 1 minute gap. So somewhere like right here. Stops were as follows. They were the farthest point of possible retracement, which was, in this case, right down here. Why was it right down here? Well, that's because we could have came down to take out equilibrium if we ended up making a high here. If this somehow ended up reversing and this became the very top where I entered, equilibrium would have been right here, and there was a very good chance we would have tried retracing into equilibrium. But luckily that wasn't the case, and we continued going higher. And so what happened is, as we kept going higher, I ended up tweaking the fib extension, right? Because equilibrium ended up going also higher and higher. From there, this was still a decent stop loss placement. From there, again, I was in with very small amount of contracts, 2 MES contracts. We make a fair value gap on the 5 minute that we retrace into, right? And once we are in here, what do we see? We hit 50% of this gap, but not only that, we hit equilibrium. And as soon as that happens, well, not as soon as that happens, but when that happens, we get a huge displacement bullish candle that not only that pretty much breaks structure on the 1 minute time frame, indicating a successful rejection off of the 5 minute retrace, right? And I actually ended up adding 2 more positions, 2 more contracts after this confirmation that this 5 minute gap is holding. From there, for just a little bit of an added kind of peace of mind, what I did was I used a fib extension to map out my take profit levels, right? So here's the thing. 1.618 is a decent level to target. A safe level to target is 1.272. That will for sure get hit. Okay. Only issue is that would make my risk to reward absolutely garbage. So what did I do instead? I deleted the wrong thing. What did I do instead is after this, I ended up moving stops to these lows. Okay. Taking some risk off the table. From there, as soon as we broke past these highs, as soon as we hit these highs, I didn't want to have price end up using these highs as a retracement, as a point of liquidity. So once these guys got taken out, I actually just mapped out another fib extension over here and saw where, okay, this is equilibrium. This is fairly low. I covered even more risk. And then as price continued to develop, we hit that area, which is 1.272. And from there, I went completely risk-free, completely break even on that trade. From there, again, we had some small retraces. Yeah, sure, could have price came down and took me out. Yeah, but by that point, I was fine with it. I had no issue with that. And luckily enough, we actually made a 5-minute gap that secured me or gave me a little bit more security in terms of that the position is going to keep going up before it hits my break-even point. And lo and behold, we took out this hourly unfilled. We even went past a little further up and took out this high right here that I could have targeted, but I chose not to. Funny enough, we made another SMT. Today was just SMT Central. Actually, I don't even know what the hell this is because we took out some crazy stuff over here on NQ. Yes, we didn't even fucking hit this hourly high. So whatever. That's all for today. Video got real long, so you guys have a good night. I hope you gain some insight from it. I hope you learned something, and I hope this helps your future trading. Take it easy.